South Africa is the African market everyone thinks they understand, but few actually do. A country where capital moves at lightning speed. Trading floors glow with tickers, screens, and data-driving decisions. Boardrooms in Sandton and Cape Town steer continental strategy from glass towers. Markets rise and fall. Disciplined operators watch the numbers, not the noise. Yet beyond the headlines, unemployment bites. Talent waits for a real shot. So homes and businesses install solar and batteries to keep the lights and the economy on. Automation, logistics, and smart agriculture push productivity forward. If you think South Africa's market is slowing down, you're wrong. If you think startups can't win there, you're wrong. And if you think the future is in Nigeria or Kenya alone, you're very wrong. This is the new South Africa. A market in transition, in tension, and in transformation. And if you understand what's happening beneath the headlines, you'll see why investors are quietly doubling down. Today, we break it all down. South Africa remains Africa's most industrialized, most diversified, and most financially liquid economy. It is not the fastest growing economy, but it is one of the most structurally important. What makes South Africa unique is this paradox. Logistics and warehousing underpin a diversified supply base serving the region. Skilled technicians and automation signal an industrial core built for scale. Deep, liquid capital markets. JSE screens financing enterprise across Africa. Strong corporate governance and professional management drive stability. Clear regulation and capable institutions frame the operating environment. High-throughput distribution links factories, farms, and fast-growing retail. Multinational headquarters base here to serve southern and continental markets. Energy transition and mining coexist, old and new economies in parallel. Rooftop solar and batteries scale fast in response to load shedding. The rand is volatile, but risk is priced, hedged, and managed daily. A 60 million urbanizing workforce and consumer base fuels demand. Growth is modest, yet reforms and productivity create expansion pockets. The pressure point, high unemployment and a polarized labor market. South Africa is a country in reset mode. And whenever an economy resets, it creates opportunities that didn't exist before. Today, we'll break South Africa down across these chapters. We'll cover the economic reality, the sectors winning today, where startups can play, the accelerator and incubator landscape, the VC firms most active, the real risks and how to price them, the untapped opportunities, and what the future looks like, plus what founders and investors should do now. Let's begin. South Africa's economy is worth roughly $400 billion, making it the second largest in Africa after Nigeria and ahead of Egypt. Four numbers explain everything. Unemployment is severe, over a third out of work, with youth hardest hit. Formal jobs are scarce, so gig work and micro-businesses fill the gap. The economy still leans on mining. Exports bring forex, but cycles whipsaw growth. Load shedding pushes homes and businesses to solar and batteries. Distributed energy is booming. These numbers challenge businesses every single day. But they also create the biggest innovation pressure on the continent. When energy is unreliable, the market becomes the perfect laboratory for distributed power, solar, battery storage, and energy tech. When unemployment is high, the market becomes the perfect breeding ground for gig economy platforms, micro-entrepreneurship tools, and SME technology. When logistics costs increase, demand for supply chain technology surges. South Africa is not dysfunctional, it is in transition. And transitions create billion-dollar opportunities. South Africa's diversification is unmatched in Africa. Here are the sectors that dominate and are expanding fast. A. Financial services and fintech. South Africa has the most advanced and regulated financial sector in Africa. The JSE and deep banking networks provide liquidity, credibility, and exits. Global connectivity and strict compliance standards give fintech founders room to scale safely. High retail banking penetration meets fast-growing digital wallets and contactless payments. That mix fuels adoption of new financial products. Modern payments rails, data centers, and cybersecurity talent reduce integration risk. It's why enterprise-grade fintech thrives here. Strong governance and prudential oversight attract institutional buyers. Fintech that solves compliance and risk gets fast enterprise traction. Fintech thrives here because the infrastructure supports scale. Builders focus on embedded finance, BNPL, remittances, and insurance automation. With APIs into banks and telcos, startups partner rather than compete head-on and scale faster. Fintech remains South Africa's most investable sector. B. Renewable energy and climate tech. Because of load shedding, energy is the biggest problem and biggest opportunity. Rooftop solar is exploding across homes, SMEs, and retail centers. Installers, asset financiers, and O&M platforms are scaling with it. Batteries and inverters keep operations running through outages. Monitoring and maintenance software turn energy resilience into a service. Grid analytics, demand response, and virtual power plants are moving from pilot to rollout. Enterprise buyers want predictable uptime, not just cheap kilowatts. Energy audits and retrofits unlock measurable savings. Efficiency SaaS, sensors, and smart meters create defensible, recurring revenue. Financing matters. PPAs, leases, and pay-as-you-save models remove CapEx barriers. That's why climate tech scales here first. South Africa will become Africa's largest renewable energy market within 5 years. C. Retail, FMCG, and e-commerce. South Africans love convenience and digital shopping. Quick commerce and e-grocery are winning in dense urban nodes. The edge goes to teams that control last-mile delivery and customer experience. Fulfillment tech, slotting, pick paths, and inventory analytics cuts costs. Returns and reverse logistics are the next competitive battlefield. Robotics, WMS, and real-time tracking are standardizing same-day reliability. Cold chain and dark store networks unlock higher margin categories. D. Agriculture and agritech. South Africa feeds half the region. Precision agriculture, drones, sensors, and mapping raises yields while saving water. Climate risk tools and market linkages improve farmer income and resilience. E. Manufacturing, automotive, packaging, and FMCG plants are digitizing fast. Predictive maintenance and quality automation cut downtime and waste. Demand for value chain technology, robotics, and digitization continues to grow. F. Tourism, hospitality, and travel tech. South Africa attracts millions of tourists every year. Experience marketplaces, dynamic pricing, and digital concierge tools drive higher spend. Niche ecotourism and adventure travel convert well with mobile-first booking. G. Health tech, telemedicine, diagnostics, and clinic digitization reduce queues and costs. Claims automation and e-pharmacy platforms scale through private insurers and employers. South Africa's health sector has both public and private segments. Huge opportunity. South Africa is a problem-rich market, which means it is an opportunity-rich market for startups. 1. Distributed energy solutions. Solar, batteries, and smart inverters cut diesel costs, reduce outages, and stabilize operations. Financing models, leasing and PPAs, speed adoption, while remote monitoring proves uptime and payback for SMEs and homes alike. 2. SME enablement tools. POS, inventory, and payments platforms formalize cash businesses, unlock data-driven lending, and simplify tax compliance. Simple onboarding plus offline-first features win the township and high street merchant. 3. Logistics and supply chain. Tech route optimization, live fleet tracking, and warehouse automation shrink delivery times and spoilage. E-commerce fulfillment and customs digitization turn complexity into margin and scale. 4. EdTech mobile-first learning, vocational micro-credentials, and employer-tied courses upskill at speed. Verified outcomes drive hiring, while blended models keep costs low and completion rates high. 5. AI and automation for big enterprises. Predictive maintenance, RPA in finance, and AI customer support cut downtime and OpEx. Plugins for SAP and legacy stack speed pilots, proving ROI without ripping out systems. 6. Agriculture digitization. Precision irrigation, soil sensors, and satellite mapping raise yields and save water. Co-op marketplaces, bundled finance, and parametric insurance stabilize farmer incomes. 7. Consumer apps, on-demand delivery, BNPL, and streaming bundles win on convenience and price. Localized loyalty, neo-banking rails, and hyperlocal logistics point towards super app potential. 8. B2B SaaS for regulated industries. Compliance-first tools, KYC, AML, health data privacy, ESG reporting, solve pain for banks, insurers, and hospitals. Built-in audit trails and data residency create defensible moats. South Africa has Africa's largest and most structured startup support ecosystem. Key players include university-linked incubators like Stellenbosch Launch Lab and WITS Tushimologong, turn research into startups with labs, makerspaces, and early seed support. Community hubs such as CD and Josie Hub coach founders on product, UX, and go-to-market, backed by active peer networks and mentors. Hardware and climate tech programs provide benches, prototyping support, and industry advisors for energy, agritech, and health devices. Pitch cycles and demo days connect founders to corporate buyers and angels, turning pilots into paid contracts. Sector accelerators like Startup Bootcamp Afritech and Grindstone sharpen metrics, compliance, and enterprise sales readiness. Hands-on mentors, operators, CTOs, and CFOs guide pricing, hiring, and product roadmaps to reach scale faster. Workshops cover IP, data protection, and regulatory pathways, so teams leave with investor-ready documents and clear milestones. Advisory councils bring banks, telcos, and miners to the table, aligning solutions with real procurement needs. Makerspaces and MLab-style programs help teams prototype, user test, and prepare for certification and distribution. Corporate-backed platforms like Alpha Code offer non-dilutive support, pilots, and access to decision-makers across enterprise. South Africa may not be the largest startup market, but it has one of the most mature ecosystems for support, mentorship, and enterprise buyers. Section 5. VC firms most present in South Africa. These investors are actively backing South African startups and scale-ups. The landscape rests on three pillars: local early-stage funds and angel syndicates, corporate venture arms from banks, telcos, and retailers, and Pan-African or global funds with South Africa-based partners. They typically invest from pre-seed through Series B, with meaningful follow-on capacity. Focus areas include fintech, energy and climate tech, logistics, B2B SaaS, health tech, and manufacturing digitization, favoring real traction, enterprise pilots, and strong governance. Beyond capital, they open corporate distribution, help navigate compliance, recruit senior talent, and support expansion across SADC. Expect rigorous diligence, active boards, and continued backing for teams that execute. Section 6. Risks and misconceptions. What investors worry about and what the data actually shows. Risk 1. Load shedding. Reality. Rooftop solar plus battery backup is scaling fast across homes and businesses, cutting downtime and stabilizing operations, and that same pain is attracting billions in new energy investment. Risk 2. Currency volatility. The rand does swing, but that's standard in emerging markets. Teams hedge, price in dollars where possible, and design cash cycles to absorb FX movement. Risk 3. Slow GDP growth. Startups don't need headline growth. They need inefficiencies. South Africa's fragmented services and energy gaps create high-margin niches for focused, unit economic wins. Risk 4. Big corporate competition. Yes, corporates dominate, but they move slowly. Startups partner, white label, or wedge into agility gaps, winning with speed, usability, and service. Risk 5. Regulatory complexity, mostly finance and health. The upside, compliance creates strong moats. Sandboxes exist, and founders who build for audits and data protection earn durable trust. Section 7. Untapped future opportunities, where the next decade's outsized returns will be made. 1. Green hydrogen. South Africa is poised to lead Africa, with abundant wind and solar, deep-water ports, and industrial demand. Think electrolyzers, storage, certification, and export corridors to Europe and Asia. 2. Battery storage manufacturing. Residential, commercial, and mining demand is exploding. Opportunities in pack assembly, BMS software, LFP chemistries, recycling, and after-sales service. 3. Carbon markets. Large industrial emitters make South Africa ideal for high-quality credits. Build MRV software, project development, and compliance-grade offsets aligned to global standards. 4. Township economy digitalization. Over 20 million consumers, still under-digitized. Digitize payments, last-mile delivery, merchant tools, and credit using alternative data and community logistics. 5. Blue economy. Ports, marine transport, and aquaculture remain untapped. Port automation, cold chain logistics, ship repair clusters, and ocean renewables pilots are all in play. 6. Mining tech and automation. A major employer that's digitizing fast. Sensors, safety systems, autonomous haulage, predictive maintenance, and ESG tracking, exportable tech for global mines. 7. AI for compliance and risk. Banks, insurers, and telcos are heavy users. KYC and AML, fraud analytics, model risk, and regulatory reporting. Privacy-preserving AI gives a real edge. 8. Smart manufacturing and robotics. Factories are upgrading now. MES and IoT, cobots, vision-based QA, and additive. Big scope for local integrators and managed services. Section 8. What the future looks like. Near-term realities, long-term momentum. South Africa isn't declining, it's transforming. The next decade will reward founders and investors who grasp this. Energy will decentralize. Manufacturing will digitize. Township markets will be brought online and monetized. AI will reshape enterprise systems. Logistics will be technology-driven. Retail will become hyper-convenient. Agriculture will turn climate-smart. And capital will keep flowing into the innovation hubs powering it all. South Africa remains one of Africa's top 3 startup markets, and more importantly, a place where complex problems unlock rare opportunities. Before we close, take one last look at Johannesburg, the engine of African business. Momentum meets complexity here, and that's exactly why it matters. Stay with me for a quick recap and your next step. In one breath, here's the recap. Intro context, 04200. South Africa remains Africa's most industrialized, most diversified, and most financially liquid economy. It is not the fastest growing economy, but it is one of the most structurally important. What makes South Africa unique is this paradox. On one side, world-class infrastructure, a highly skilled labor force, deep capital markets, strong corporate governance, a stable regulatory environment, a large consumer base, 60 million people, major multinational presence, existing side by side with electricity shortages, a volatile currency, a polarized labor market, low GDP growth, high unemployment. That tension is exactly where smart founders and investors find edge. Ready to go deeper? Call to action, 2915-30 Yao Sao. If you found this breakdown useful, subscribe to Africa Business Explained. Next, we're breaking down Egypt Explained. You don't want to miss that one. Hit subscribe now and meet us there. South Africa is the African market everyone thinks they understand, but few actually do. It's a country where Africa's most advanced financial system lives, where the highest number of billion-dollar companies operate, and where roughly 80% of the continent's private capital flows pass through. And yet, unemployment is among the highest globally. Electricity shortages are reshaping the entire business ecosystem, and new industries are rising faster than almost anywhere else on the continent. If you think South Africa's market is slowing down, you're wrong. If you think startups can't win there, you're wrong. And if you think the future is in Nigeria or Kenya alone, you're very wrong. This is the new South Africa. A market in transition, in tension, and in transformation. Understand what's happening beneath the headlines, and you'll see why investors are quietly doubling down. Today, we break it all down. Intro context. South Africa remains Africa's most industrialized, most diversified, and most financially liquid economy. It is not the fastest growing economy, but it is one of the most structurally important. What makes South Africa unique is a paradox. On one side, world-class infrastructure, a highly skilled labor force, deep capital markets, strong corporate governance, a stable regulatory environment, a large consumer base of about 60 million people, and a major multinational presence. On the other side, electricity shortages, a volatile currency, a polarized labor market, low GDP growth, and high unemployment. South Africa is a country in reset mode. And whenever an economy resets, it creates opportunities that didn't exist before. Today, we'll break South Africa down across these chapters. The economic reality, the sectors dominating today, high-growth startup opportunities, the accelerator and incubator landscape, the VC firms most active in South Africa, the risk factors, the untapped opportunities, the future of South Africa's economy, and what founders and investors can do now. Let's begin.